My talk today is on the global financial crisis and trade protectionism, the implications for Canada. Can everyone hear me back there? Okay. Subjects such as the financial crisis and trade protectionism are very complex. For example, I devoted one SFU seniors course only to monetary and financial issues, and another seniors course only to global trade issues. So it is impossible for me to give detailed explanations here, but I'll do my best to explain these issues as clearly as possible. And the reason I think it's worth doing is because, at least from my perspective, they're such important issues. My talk will be in 4 parts, which are somewhat overlapping. First, I will discuss the causes of the global financial crisis. Second, I will discuss how the crisis has contributed to trade protectionism. Third, I'll discuss the effects of trade protectionism on Canada. And finally, I will offer suggestions for Canada's policy response. And like a lot of issues in Canadian foreign policy, there's no easy answer to Canada's policy response. It's likely to be a mixture of some of the suggestions I give. I'll start out by looking at the causes of the global financial crisis. The most immediate cause was a subprime mortgage crisis in the U.S. housing market. People who do not qualify for regular mortgages at market interest rates because they have low incomes, poor credit ratings, or poor employment prospects sometimes get subprime mortgages. In the 1990s, U.S. mortgage lenders provided low interest rates to entice people with poor credit ratings to borrow in the subprime market. And this led to a dramatic increase in U.S. home ownership. Rating agencies such as Moody's and Standard & Poor's issued some warnings about emerging problems in the subprime mortgage market, but the warnings were too little and too late. The increased demand for houses led to a building boom, but this eventually resulted in an oversupply of houses, and U.S. housing prices began to fall in mid-2006. Mortgages were also coming up for renewal at higher interest rates that subprime borrowers could not pay, and they had to default on their loans. Am I going too fast, or are you following me? Okay. Because of the decline in housing prices, the subprime borrowers ended up owing more than the value of their houses. And when scores of people owe more on their mortgages than the value of their houses, it's not surprising that you have a subprime mortgage crisis. The U.S. subprime crisis became a global financial crisis in 2008 because the subprime mortgages had been repackaged and sold to investors around the world. Now, although the subprime mortgage crisis in the United States was the most immediate cause of the global financial crisis, there were also some important underlying causes, the next group down there. The one underlying cause has been the inadequate regulation of banks and other financial institutions, especially in some countries such as the United States and Britain. This is a major problem, and we're still far removed from finding adequate solutions to the inadequate financial regulations. However, I can't focus on everything in this talk, and I will not focus on this problem here. In this talk, I'll focus on a second underlying cause of the crisis, the imbalance in financial relations between borrowers and savers. Some analysts blame the financial crisis on U.S. monetary and fiscal policies that enabled Americans to borrow too much and live beyond their means. Others blame the crisis on excess savings in East Asia, which were used to buy U.S. Treasury bonds and financed the U.S. overspending. In my view, and I feel in reality, imbalances created by both U.S. overborrowing and East Asian savings contributed to the financial crisis. I'll now discuss why the U.S. has borrowed so much and why East Asia has saved so much. So I'm basically looking here at the imbalance between borrowers and savers. Why has the U.S. borrowed so much? The U.S. has borrowed to finance its current account deficits. I do not have time here to fully explain what the current account is in a country's balance of payments. In my text and in discussions in classes, I spend several classes discussing the balance of payments. Suffice it to say that the largest component of a country's current account is its balance of trade. If a country buys more goods and services from foreigners than it sells to them, it is likely to have a current account deficit, with more money going out of the country than coming in. If a country sells more to foreigners than it buys from them, it's likely to have a current account surplus, with more money coming into the country than going out. So let's look at what the U.S. current account and other countries' current account has been in recent years. I've got some figures. I've rounded the figures out in terms of current account. As you can see from the table, the United States has had a problem with current account deficits long before the global financial crisis. These crises don't start overnight, believe me. As the table shows, U.S. current account deficits increased from about $300 billion in 1999 to $857 billion in 2006. In contrast, you'll note that Russia had a current account surplus of $96 billion in 2006. Japan had a surplus of $170 billion, and China had the largest surplus of $239 billion. Now, although the U.S. current account deficit declined somewhat in 2008 because of the recession and the falling dollar of value of the U.S. dollar lowered U.S. imports, the U.S. deficit remained and has remained much too high. China's current account surplus, by contrast, increased to $426 billion in 2008. This partly explains the massive rise in China's foreign exchange reserves. Okay? Okay, I will go back to why the U.S. has borrowed so much. The second reason, the U.S. has also borrowed so much because its consumption has outstripped its production and savings. And Americans have borrowed heavily to finance their overspending habits. For example, the George W. Bush administration opted for both guns and butter when its military engagements in Iraq and Afghanistan were accompanied by a marked decrease in taxes. You would have thought there would have been an increase in taxes. Also, U.S. households, on average, save less and borrow more than households in many other countries, especially in China and East Asia. Okay, I'm sure a lot of you are familiar with what I've discussed, some of what I've discussed so far from the press. Why has the U.S. borrowed so much? I think why East Asia has saved so much is not as immediately obvious. And I'd like to discuss that. Why has East Asia saved so much? In the late 1990s, there was a financial crisis in East Asia. I don't have time to discuss the 1990s East Asian financial crisis. I discuss it in courses and I discuss it in my writing, etc., but I don't have time to discuss it here. The main issue is that the 1990s financial crisis in East Asia caused a flight of capital from these countries. Capital left these countries in droves, and it created serious financial problems, starting with Thailand and spreading to many other East Asian countries. After the crisis ended, the East Asians decided never again. They basically seemed to decide that. They increased their exports and accumulated large monetary reserves so they would be less vulnerable to capital flight in the future. In many ways, a rather intelligent thing to do. So as a result, with the focus on export-led growth in East Asia, with the focus on building up their monetary reserves, the East Asians have managed to increase their trade surpluses quite dramatically, exports much greater than imports. These East Asian trade surpluses have resulted partly from their greater competitiveness, but also from the fact that China and some other countries manipulate their currencies so their goods are cheaper abroad. People in China also lack the kind of social welfare net that we have, and they often increase their savings as a security measure. Now, there are differences, obviously, as well as similarities between the East Asian countries. And the rest of my talk will focus specifically on China, because I can't focus on all of the East Asians, and because China's relationship with the U.S. is so central to the future of the global economy. You might have seen there was an article in the Globe and Mail today talking about the group of two, China and the United States. Okay, so looking at China and the United States, I'll go on with the imbalance between borrowers and savers. China has saved so much, the US has borrowed so much. Why has China lent so much to the US? Why have they been willing to do so? Most countries that continue to spend beyond their means find that others either increase the costs of borrowing, they might require higher interest rates if they're going to loan, or they might refuse to lend to those countries. So why has China used its current account surpluses to buy so many U.S. Treasury bonds, which in recent years are so often low yielding? First, China, as an authoritarian system, can invest a large share of its surpluses abroad rather than using them to benefit the Chinese people. China is a paradox today. It has about 800 million poor people, but it consumes less than half of its gross domestic product. Gross domestic product is its economic output. It consumes less than half of its economic output. And this enables it to export capital around the world, which it is doing. Second, China purchases U.S. Treasury bonds and other securities to bolster or raise the value of the U.S. dollar, to keep it from falling too much. So the next obvious question is, why does China bolster the U.S. dollar? I hope I'm not going too fast with this. Are you following me so far? Okay. First, China bolsters the U.S. dollar to promote its exports to the United States. The U.S. is by far, still is, the largest single country market for other countries' exports. But the U.S. current account deficits threaten to decrease the value of the dollar. We're already seeing that. And when the value of the dollar decreases, there are less U.S. purchases abroad, and that means less U.S. purchases from China. If the value of the U.S. dollar declines, what happens? Foreign goods become more expensive for Americans, and they buy less abroad. As a result, China bolsters the value of the dollar by buying U.S. Treasury bonds and other securities, and this enables Americans to keep buying Chinese goods and services. Second, and all these three are interrelated, China has huge reserves in U.S. dollars. Most of China's reserves, by far, are in U.S. dollars. Why? Because it's been the key international currency since the 1940s. China has shifted some of its reserves from dollars to other currencies such as euros, the yen, gold, etc. But it's very careful about doing this and does so very slowly. Why? Because a rapid decline in the dollar's value, if China shifted its reserves, would greatly decrease the value of China's reserves, because so many of them are in U.S. dollars. So, I said to my class, the last class I taught, some people say the U.S. and Canada are the two most interdependent countries in the world. Well, from our perspective, we are. but I think US and China globally are the most two interdependent countries in the world today. Third, the US dollar is the top global currency. I've already discussed that. The US has been able to print more dollars and so far to avoid sharp decreases in the dollar's value because of the dollar's position as the top global reserve currency. There continues to be demand for it. China, like a lot of other countries, resents this exorbitant privilege of the US to print more dollars, but at this point, there is no alternative to the dollar as the key global currency. The accumulation of dollar reserves by China and other countries enabled the United States to increase consumption and maintain low interest rates and lax monetary policies that contributed to the housing bubble. But as we know, the bubble was unsustainable and it burst. I will now discuss the important linkages, and here it gets complex, between the global financial crisis and trade protectionism. Okay. I'm not used to giving talks of this sort. I'm used to giving talks in a lecture where, a class where I say at this point, well, is anything unclear? And then I go on. So in this type of talk, I have to assume everything is clear, and I will go on. Anyway, as I mentioned, U.S. current account deficit and U.S. debts did not start overnight. And the global financial crisis did not start overnight. In the same way, trade protectionism did not start overnight. As the U.S. current account deficit increased, it was the main leader in pushing for trade liberalization. Not surprisingly, trade protectionism started to increase well before the global financial crisis. So let's look at before the financial crisis. Trade protectionism was increasing before the global financial crisis. In October 2001, the members of the World Trade Organization agreed to launch the Doha round of multilateral trade negotiations. It's not surprising that it was October 2001 that the members of the World Trade Organization agreed to launch the Doha round. Because in the previous years, trade protectionism was increasing. They couldn't agree to launch the new round of trade negotiations. But then came 9/11, the September 11 tragedy of the bombing of the World Trade Center. That brought countries together like the European Union and the US, and it's no accident that shortly later they agreed in Doha to launch the Doha round. But it's easier to launch a round than to complete it. And after almost 7 years of negotiations, the Doha round talks broke down without an agreement. A major reason for the breakdown was the conflicting views of industrial and developing countries on many issues, such as agricultural trade. And I've actually done some research on all the differences between industrial and developing countries that caused the Doha round to break down. A second reason for the breakdown was the lack of leadership by the three largest trading entities today: the United States, the European Union, EU is European Union there, and China. The United States was the main force behind previous global trade negotiations. But it has become more protectionist because of its current account deficits and its growing foreign debt. What about the European Union? Well, the European Union is a major trading bloc today with 27 member countries, but it's too divided internally to substitute for U.S. leadership in trade. What about China? Well, despite China's growing influence, as a developing country, its interests differ from the interests of the United States and the European Union on many trade issues. And the US and EU, as I mentioned, accuse China of manipulating its currency and giving itself unfair advantages in trade. So if you look at the three largest trading entities today, the US, the European Union, and China, none of them is willing and able to exert leadership in concluding the WTO Doha round. Now, it's possible they'll conclude it at some point, but my guess is just because they conclude it doesn't mean it will be concluded in a meaningful way. Well, they'll accomplish a lot. That's what counts. Okay, now let's look at trade protectionism since the financial crisis. How has it changed since the financial crisis? Since the global financial crisis, trade protectionism has increased at a much more rapid rate. This is not surprising because countries try to bolster their economies and their domestic employment when economic conditions deteriorate. And how do they try to bolster their economies and domestic employment? Often by imposing more trade barriers. They think they're protecting their workers. But obviously, if more and more countries are doing that, no one's protecting anyone very much. Okay, this increased protectionism since the financial crisis is having a serious effect on Canada. Why is it having such a serious effect on us? Well, compared with other countries, we are highly dependent on exports because of our relatively small population combined with our large landmass and resource base. Who's going to develop all those resources? Where's the money for that, etc.? A lot of it depends on the revenue from our exports. As a result, about 40% of Canada's domestic manufacturing output is exported. And being in British Columbia, I don't need to tell you that Canada depends on exports for many of its natural resources, whether we're talking about lumber, fish, what there is of it these days, oil and natural gas, and agricultural products. We're dependent on exports. The increased protectionism stemming from the financial crisis is having both general and specific effects on Canada. Let's start out by looking at the general effects, but first I'm going to take a drink of water, okay? Okay. In a more general sense, Canada is being affected by increased subsidies and trade barriers around the world. I don't have time to talk about the group of 20 here in detail, but this is an example, if you've read the press, of how the world is changing. Know who talked about the group of 20 very much a few years ago. Mainly, it was the group of 7 that Canada's a part of, and the group of 8, which also includes Russia. They were the major players. Now, all of a sudden, we're talking about the group of 20, because we can no longer exclude the BRIC economies, who include Brazil, Russia, India, and China. And they are all part of the group of 20. So the group of 20, which is composed of 20 major industrial and developing countries, responded to the financial crisis by pledging to, quote, refrain from raising new barriers to trade, unquote. However, statistics show that since this no protectionism was made, almost all of the group of 20 members have broken it and have increased some of their trade barriers. Trade disputes have also increased, the second issue there. And there have been very serious trade disputes lately between major traders such as the US and China. As a result of the increased trade barriers and the increased trade disputes, trade is likely to decline by at least 10% in 2009, global trade. And the prospects for reaching a meaningful WTO Doha round agreement are dimmer. Not surprisingly, these events are having a negative effect on Canada's exports. But rather than focus on these general effects on Canada, I'm going to use the rest of my talk to focus on an issue that's having a more specific or direct effect on Canada's exports: the increased use of Buy American policies. I've already pointed out that protectionism hasn't only increased in the United States. It's increased in many countries since the global financial crisis. But what the United States does has a greater effect on us than what any other country does, because the US accounts for about 75% of Canadian exports and about 65% of Canadian imports. So let's start out by saying, what are the Buy American policies? I'm sure you've heard of them, but what are they exactly? Buy American policies provide a preference for U.S. goods in government purchases. Not anyone's purchases, but government purchases. Excuse me. Okay. Just have to see where I was here. Okay. Provide a preference for U.S. goods in government purchases. Such policies are designed to protect American labor and are more prevalent during difficult economic periods. Therefore, it's not surprising, you might be surprised to know, that the U.S. Congress first enacted the Buy American Act in 1933 during the depths of the Great Depression. The act applies to government procurement. And in lectures and in my writing, I spend a lot of time on government procurement. Government procurement refers to the government's purchase of goods and services for its own consumption. The Buy American Act required that goods the U.S. government purchases for use on federal territory must be of domestic origin and be composed mainly of domestic raw materials. These regulations are subject to several exceptions. I'll only mention one of the exceptions here. For example, the United States can waive the Buy American requirements to comply with international agreements, such as the WTO agreement, the World Trade Organization agreement, and the North American Free Trade Agreement, the NAFTA agreement. What happened to the Buy American policies after they were instituted in 1933? Well, for most years, they were pretty dormant. Not much did happen with them. But they have only become an issue during difficult economic periods. And many people say that this is the most difficult economic period since the Great Depression, and it's not surprising that in this period the Buy American policies have been revived in a major way. How have they been revived? Well, in February 2009, President Barack Obama signed into law the U.S. Recovery and Reinvestment Act, which I'll abbreviate and is often abbreviated as the Recovery Act. The Recovery and Reinvestment Act, or the Recovery Act, has Buy American provisions that provide a preference for U.S. domestic products in government-funded projects. And with all the government bailouts today, that's a lot of government-funded projects. Now, the World Trade Organization and NAFTA place some limits on Buy American provisions. But this is the critical part. The limits they place are on Buy American provisions as they're applied to the U.S. federal or national government. The WTO and NAFTA do not apply to what subnational governments do, such as U.S. states and municipalities. This is critical because U.S. state and local governments are using much of the U.S. government's stimulus money to deal with the financial crisis. And I'll repeat, the WTO and NAFTA don't deal with what U.S. state, Canadian provincial, or U.S. or Canadian city governments do. And they therefore don't limit what subnational governments do in terms of the Buy American Act. Now, as a result, Canadian firms are being frozen out of billions of dollars of bids for state and local projects under the U.S. Recovery Act because of the Buy American provisions. Now, the Buy American policies are certainly not the only reason for the decrease in Canadian exports to the United States. Other reasons relate to the decrease in our exports, and they have decreased quite drastically. First of all, the decline in our auto exports. Look what's happened to the North American auto industry. Secondly, the decline in the prices of our oil and gas. You know the price of oil has gone down. Thirdly, the recession in the United States and elsewhere. So Americans are simply buying less. And finally, the fact that China has displaced Canada by far as the largest merchandise exporter to the United States this year. However, nevertheless, even though other factors have decreased our exports to the United States, the Buy American policies are of great concern to us. So how should we respond to them? I'll now look at our possible responses. Canada's response to Buy American policies. As I discussed, the World Trade Organization and NAFTA, the North American Free Trade Agreement, limit Buy American policies of the U.S. federal government, but not of subnational governments. By subnational governments, I mean U.S. states, U.S. cities, Canadian provinces, Canadian cities. As a result, Buy American provisions are freezing Canadian firms out of many bids for U.S. state and local projects. So how should Canada respond? In talking about possible responses, I'm simply trying to demonstrate that there are no easy answers to this. None of this is an easy answer. And you can take my discussion and decide yourself what combination of responses you think might be appropriate and the most beneficial to us. First of all, we could launch a trade lawsuit against the United States. Canada could argue that state and local government projects under the U.S. Recovery Act should be subject to NAFTA and WTO rules, because even though they're state and local projects, the U.S. federal government is the one that's providing the recovery money, and it's the U.S. federal government which is imposing requirements on how U.S. states and cities use the money. So the lawsuit could say, look, it's really the U.S. federal government who's acting, and NAFTA and WTO do apply to the federal government. However, a lawsuit would take too long to prevent injury to Canadian exporters. Much of the money will have been spent by then, and there is no guarantee that Canada would win such a suit. Secondly, what about revising the NAFTA agreement so that or amending the NAFTA agreement so that we included subnational governments in it? The Canadian government, in fact, has asked the provinces to join it in negotiating with the United States to bring the awarding of subnational government contracts under NAFTA, under the NAFTA rules. However, this would involve reopening the NAFTA agreement for negotiations. People in Canada often talk about, nationalists and others often talk about, I want to open the NAFTA for this reason. And you don't open an agreement for just the reason I want. That opens all the negotiations. And it's very likely that the U.S. would demand some concessions in return. Also, NAFTA involves 3 countries, and Mexico, as a NAFTA member, would also be included in the negotiations and would have their own demands. As a result, it's likely that the U.S. stimulus money may have already been spent by the time a new agreement is negotiated. Now, revising the NAFTA agreement to include subnational governments, rules about subnational governments, may be a longer-term solution, and I do think it would be a longer-term solution. But Canadian exporters need a more immediate solution if they are to issue bids for these U.S. state and local projects. So let's go on to a third possible Canadian policy. Seek an exemption for Canada. I used to teach courses on Canadian foreign policy. I haven't taught one in a number of years. But there's a whole history going back to the 60s when Canada sought exemptions from the United States. We always wanted to be exempt from US laws in regard to others. Canadian businesses have asked Prime Minister Stephen Harper to press President Obama for an executive order, that President Obama should issue an executive order exempting Canadian companies from the Buy American provisions. In other words, it's okay if they exist as long as we're exempt. However, quick US action is unlikely because other countries would demand similar treatment and there would be opposition in Congress. And President Obama, who's very sensitive to Congress, is well aware of that. And every time Harper has raised the issue, you're probably aware Obama's response is, oh, this is not a big deal. It's just not a big issue. So seeking an exemption for Canada, that's not likely. The next possibility, retaliate against the United States. In fact, the Federation of Canadian Municipalities, the FCM, voted in June 2009 by a very narrow margin. The margin was 189 to 175, which shows you there were differences, by a very narrow margin to threaten to retaliate, not to retaliate, but to threaten to retaliate against US firms that stop buying Canadian goods unless the policy is reversed. The resolution made a threat and suspended any retaliation for 3 months in hopes that negotiations would do away with the Buy American clauses in the U.S. Recovery Act. However, most significantly, the mayors of the 3 largest cities in Canada, Toronto, Montreal, and Vancouver, would not commit to these retaliation policies. An obvious problem is that retaliation would hurt Canada more than the United States. The United States accounts for 75% of Canadian exports, while Canada accounts for only 20% of US exports. We also have a history of a cooperative, interdependent relationship with the United States, and all these issues would have to be and should be taken into account. Therefore, it's not surprising that when nothing happened as a result of attempted negotiations, the Federation of Canadian Municipalities last month, in October 2009, there was a little article I saw mentioning that it called off its threatened retaliation. Okay, let's get on to what I think is a more realistic response than retaliation: appeal to U.S. self-interest. Instead of threatening retaliation, we could point out that it is in U.S. self-interest to have a cooperative relationship with Canada, and a cooperative relationship means we not only listen to the United States listens to what we're saying and what we're concerned about. Although China, as I mentioned, has become the largest merchandise exporter to the United States, Canada continues to be by far the largest single country market for U.S. goods. In other words, China exports a lot more to the U.S. than we do now in merchandise goods. But the U.S. exports far more merchandise goods to us than they do to China. Hence the imbalance between China and the United States. So we should let it be known we are still the largest single country market for U.S. goods. We should also let it be known, the lesser known fact, that Canada is the primary export market for more than half of U.S. states. I'll only give you a few examples, and one could go on and on. For example, the jobs of about 800,000 Californians depend on free trade with Canada, and Canadian tourists spend about $1 billion a year in Florida. In appealing to U.S. enlightened self-interest, it is necessary to lobby, and sometimes this has escaped Canadians over the years because of our different system of government. It's absolutely essential to lobby both the U.S. president and influential members of the U.S. Congress. For years ago, Canada made major mistakes by thinking if we talk to the U.S. president and executive, it's good enough. Well, not in the U.S. You need to talk to the Congress. We must recognize how much influence the Congress has and that U.S. foreign trade policy is very much an extension of U.S. domestic policy. Okay, now the hardest point for Canada to face, like every country. Canada must recognize our own role in the problems that exist, and our own role in the problems related to Buy American provisions is considerable. We are largely the author of our own problems today. Why? Well, interestingly enough, when NAFTA was approved in 1994, it committed, there's an article, I did write down the article, I should have, I figured you wouldn't want the article, but now I regret I didn't. There's an article in NAFTA that when it was signed explicitly states this agreement should be followed by further talks between Canada, the U.S., and Mexico to include states and provinces in the government procurement provisions. In other words, in the NAFTA agreement, the negotiators foresaw that not including subnational governments in the government procurement provisions was an important oversight that might create problems. Well, guess what happened? Canadian governments, whether they were liberal or whether they conservative, made absolutely no difference. Whether they were opposition or not seemed to make no difference. Did not pressure Canadian provinces and cities to negotiate with U.S. states and cities. That was, 15 years ago. And as a result, since 1994, no negotiations were held on extending the government procurement provisions to subnational governments between Canada, the U.S., and Mexico. In contrast, a number of other countries did negotiate subnational government procurement provisions with the United States. Let me mention some of the countries. Britain, France, Germany, Australia, Chile, Mexico, Peru, and Singapore all negotiated subnational government procurement rules with the United States. Now, are they completely protected from Buy American provisions today? Certainly not, but they're much more protected than Canada is, because they negotiated subnational government provisions. I don't need to tell you why. We all know what Canada is like as a state, and provincial rights are so important, but there is a real world out there of trade negotiations, and I've dealt with that for years, that we have to deal not only internally with our provinces, but with the real world out there. Even today, some Canadian provinces, one in particular, Ontario, a rather important one, might not agree to open procurement completely to outside bidders because of concerns about provincial rights and about offending organized labor. As a result, we must recognize Canada's role in the current problems. Right now, the provinces and the federal government seem totally ready to negotiate with the United States. But when it gets down to the dotted I's, I think some provinces would still balk at the end of the day. Okay, finally, diversify trade. Canada should diversify its trade to become less dependent on the United States. Canada will continue to have a cooperative, interdependent relationship with the United States. That's good, very important for both countries. But it's obviously not healthy when one country has such a large percent of their exports and imports with another country. In addition to focusing on industrial countries such as the European Union and Japan, we should also expand our trade with developing countries in Asia, Latin America, and Africa. However, cooperation with the United States remains essential because it is and will continue to be by far the largest single country market for our exports. I could go into history, how in the past we tried diversifying under Trudeau. We diversified to the European Union and Japan. We found that they were even less interested in our industrial exports than the United States was. They wanted our raw materials and unprocessed goods. In sum, there is no easy solution to the trade protectionism resulting from the global financial crisis. One issue I did not have time to discuss, let me go back to that because it's so important. Is the inadequate regulation of banks and other financial institutions. I didn't even touch on that because that's a whole other series of lectures. But obviously, that is one of the most difficult issues for the Group of 20 to reach agreement on. They haven't reached agreement on it, and it's one of the most critical issues to avoid a replay of what has just happened on a much bigger scale. Another issue is to develop a more effective global trading system. And part of this is accepting the reality, listen Canada and others, that it must apply to subnational as well as national governments. Despite the Buy American policies, I'm not convinced that all Canadian provinces are willing to accept that reality. I would conclude by saying that Canada should become more actively involved than we are now in efforts to revamp the global financial system and to revamp the global and regional trading systems. I think we have to become more of an actor on the global economic stage, and I think we have the capabilities to do so. In an age of interdependence, Our future will depend on how well the global financial and trade systems are able to function. Thank you.